First up, let's take a look at the Asian markets this morning. Asian markets are lower in trade following a weak close that we saw on Wall Street. So all three of the major indices in Asia, Nikkei, Kospi, Straits, Times, all of them are currently trading in the red. Let's pull up the SGX Nifty and tell you what exactly the SGX is doing at this point as well. Remember that we've had two good sessions on a trot. Currently, the SGX is taking cues from Asia. At this point, it's indicating just about a mild, soft start on our indices. Anisha, what about the US?
Oh, well, yes, the soft start was there in Wall Street as well in terms of the ending of trade yesterday, because the stocks ended lower with the Nasdaq snapping a 8-session winning streak and the Dow Jones losing 100 points following the release of lackluster US economic data. And amid ongoing trade discussions between the Trump administration and the Chinese counterparts. CNBC's Aditi Roy gets us a wrap of all that transpired on Wall Street yesterday.
U.S. stocks lower today on mixed economic data. The Dow falling 103 points, the S&P off 9, and the Nasdaq down 29. The number of Americans filing for unemployment benefits declining more than expected last week, according to the Labor Department. But that good news tempered by some shaky data out of the Philadelphia Federal Reserve, with its businesses index falling to its lowest level since May of 2016. Meantime, shares of Nike under pressure today after a sneaker malfunction caused an injury to a Duke University basketball player. Less than a minute into a nationally televised game against the University of North Carolina, star player Zion Williamson's shoe fell apart, causing him to fall and injure his knee. Nike responding to the incident, saying it is working to identify the issue. And Tesla shares sinking after Consumer Reports revoked its recommendation on the Model 3 based on reliability concerns. Tesla responding to the report, which is partially based on thousands of reviews by vehicle owners, saying the majority of the issues have already been corrected. Tesla's overall reliability rating dropping to number 19 out of 33 brands. That's the action from the U.S. market. Back to you in Mumbai.
Okay, and we had a slew of economic data that was released in the United States as well. So durable goods orders rose 1.2% in the month of December versus expectations of a 1.4% growth. Core orders also slipped 0.7% in December. Meanwhile, the U.S. private sector output growth disappointed due to concerns about the global trade outlook. IHS Market Manufacturing PMI fell to a 17-month low at 53.7 in the month of Feb versus 54.9 last month. Meanwhile, U.S. weekly jobless claims dropped 23,000 to 216,000 for the week ended Feb 16th, but the 4-week moving average has risen to more than a 1-year high, suggesting that the labor market indeed is possibly slowing. Well, let's hear out what St. Louis Fed President James Bullard had to say on the Fed's rate trajectory.
The message, from my point of view, is that the normalization process in the United States is coming to an end. On rates, we've already raised rates about 225 basis points from where they were initially. On the balance sheet, we've got that decision hopefully coming up in the next couple of meetings. So I think we're in a good place today. We've had a lot of success, and people said it couldn't be done. We got the interest rate back up. We got the balance sheet, reserves are down 40% from where they were. Basically, I think we're in a very good place today. We've got this muted inflation, no urgency for action. Inflation just hasn't come around. We've put in the muted inflation language. You had 2 years of blockbuster upside performance in the U.S. economy in 2017 and 2018. Everybody was surprised to the upside. We still didn't see any inflation in that environment. So I think that's got people backing off the idea that there's such a lockstep relationship between the real economy and inflation. One of the things that we could do here with this policy is recenter inflation expectations more on our 2% target. They're too low compared to our 2% target right now.
And the high-level U.S.-China trade negotiations continue in Washington as the March 1st deadline nears. Now, reports suggest that negotiators have started to iron out specific details of a possible trade deal. Hear out what experts have to say on the possible outcome of these negotiations.
It's very complicated in terms of the various issues that need to be resolved over time. I think we get the optics of a deal before the deadline on March 1st. I do. However, I do think we also get a push. I think it's a balance, and I think the president is well aware that trade does affect markets. That said, I think that positive outcome is largely largely priced into markets right now, and I don't really see a trade resolution in really any form, frankly, providing a positive catalyst to markets here. With the S&P closing in on 2,800, I think we're fairly valued given the other tailwinds, the absence of other tailwinds into the end of the year.
We completely agree that if this were just about the trade deficit, about buying more LNG and soybeans and Boeing airplanes, there would have been a deal last May. This really is more structural, and those things are going to be much harder to come by. You have to remember that we've been negotiating with the Chinese over these very issues for years under the Obama administration and under the Bush administration, and we haven't really gotten very much. There have been a lot of promises made, and they haven't been able to honor them. And so that's why, USTR Ambassador Lighthizer is so focused not only on the promises that are being made, but also can they enforce those promises? I think that's been the big issue.
Okay, well, let's tell you about the European markets. It was a mixed close for the European markets as weak corporate earnings weighed on sentiment. So the banking sector really led the losses in the region on the data front. Manufacturing PMI slipped to 49.2 this month, which is its lowest level all the way since mid-2013, while the composite PMI, which is seen as a barometer to economic health, has risen to 51.4 in the month of Feb. So as you can see, it was a bit of a mixed close in Europe.
Okay, then let's shift focus to the world of currencies because the dollar index holds gains amid developments on US-China trade talks and on the back of the weak economic data that affirmed expectations of Fed holding interest rates steady in the near term.
And in the world of commodities, crude oil prices have dipped from 2019 high levels as American crude stockpiles continue to swell. However, OPEC-led production cuts have tightened supplies around the world and is helping keeping losses at bay.